Welcome you all to the concurrent sessions. I hope everyone has had a great lunch and are energized for the sessions coming next. So, ladies and gentlemen, esteemed guests, and fellow disruptors in the realm of data and analytics, welcome back to GCA 24 after your lunch. Today we embark on a journey through the intricate landscape where data meets disruption and where the timeless wisdom of the actuary navigates us through the currents of change. Myself, Gurpreet Babbar, fellow actuary from IA and IFRS, had multiple experience in different markets across India, UK, and US, and fond of public speaking, as you can figure out. So, some housekeeping rules. Please have your mobile phones on silent. Avoid exiting while the sessions are happening. Minimize crosstalks. Also, I just request everyone to download the GCA app if you have not done already. The QR code should be up here. Can we have the QR code for the GCA app up? Also, at the end of the session, we would have 5 minutes for Q&A. So I actively encourage you all to participate in the Q&A session. And before starting, we will just do a quick exercise that all of you know already, and you can do it by your hands, which is so whenever the speakers are coming on stage, show your appreciation, and at the time of thank you, actively participate, and that's all what's required from you, your attention and appreciation. So, introduction to the topic. The topic that's happening, the first session is IFRS 17, Issues and Challenges before Indian Insurance Industry. IFRS 17, as the global standard for insurance contract accounting, its implementation poses a myriad of issues and challenges for the Indian insurance industry. Today, we delve into the complexities, uncertainties, and opportunities that accompany with transitions, exploring how it reshapes financial reporting, risk management, and strategic decision-making for insurers across the nation. I would like to welcome, first of all, our session chair, Ms. Yogita Arora, appointed Actuary of the Oriental Insurance Company and Limited. Yogita has extensive experience in life, general, and health insurance and employee benefits. She is author and editor of the coffee table book, Worthy Milestones, Enduring Vision, which marked the celebration of 75 years of Indian actuarial profession. Please, Yogita. In the panelists, we have Ms. Saigeeta Bhargava, partner, PricewaterhouseCoopers Private Limited. Saigeeta is a fellow from IA and IFA with specialization in life insurance with more than 17 plus years of experience in insurance and consulting. And she has led multiple IFRS 17 implementation for domestic and global companies. Our second panelist is Ms. Asha Murali, partner, Actuarial Services BDO India. She has extensive experience in the insurance industry spanning across actuarial risk management, products, and investment. She's a fellow from IFOA, UK, and also India, and she's also a CFA from ICFA Hyderabad. So please welcome Asha. So with that, I just leave it to our session chair, Yogita. Thank you.
Thanks, Gurpreet, for a very kind introduction. Good afternoon, everyone. The topic today we have is IFRS 17, Issues and Challenges before the Indian Insurance Industry. The topic is such that we can spend hours and hours on discussing this because there are various open areas for our insurance industry right now, especially on the non-life side, I can say. But given that we have just half an hour at hand, I would try to utilize this half an hour to discuss the broader challenges, and would try to utilize the experience of our eminent speakers to understand what happened in the other geographies and how we can learn from that and utilize those experiences to efficiently handle these challenges. But before we begin, let's have a poll of what we feel are the major challenges for the industry. We have split it into life and non-life, two polls. Because the nuances are very, very different for both the industries. So may we have a poll, please? So I request everyone to open up their app and please, request you to cast your opinion on the poll. For the live one first. I hope everybody is able to do the poll on the mobile app. Requesting everyone, please. What do you feel are the top 3 challenges? Larry? Larry, can we have the results here, please? No, of that percentage of which problems are there. We have given certain options, so if you can pick up the top 3 challenges for the life industry you think. So, request everyone, please. An active participation would also help us understand more, so please. Larry, please keep the results live here so that we can understand. And not this poll, the results. Okay. Okay, so as we see that people feel that data availability, alignment between actuarial, accounting, and IT, technology, transition, all this will definitely be other challenges which we are envisaging. Okay. Thank you, Larry. So interestingly, people with the right skill, yes, definitely all of us are facing, but many, many people feel that alignment of accounting, actuarial, and IT will be an issue. Okay. Even on the life side is surprising because being from non-life, I was feeling this will be more challenge on the non-life, but I'm surprised to see even on the life side it's a challenge. Okay. Okay, thank you so much. So moving on. So thank you so much for your kind responses. I think that added value to our discussion, where we can begin now. So, Saigeeta, given that many insurers have already embarked on this journey, Indian insurers, so what is your experience? You have seen how our audience is feeling that yes, these will be the major challenges, the data, the technology,
Can we bring the results back on?
Yes, why not? Larry, can you have the results on the screen, please?
So maybe I'll start describing. I think, different experience for life and non-life. So I think the first one on life, I did see alignment between various accounting, actuarial, and IT sort of as an issue being the top issue, which I mean, to some extent is not surprising, but also I guess it's interesting that people have actually, most people have voted for that one. No, absolutely. I think I'll start with that. I think it's great that we recognize that that's a very critical aspect of implementation. My experience has been that we are very used to working in silos. When we bring the teams together with the common goal and with a common objective, even then we are not really in tune with understanding the language of each other. The bridging of this grab, as a consultant, one of the roles is basically to, just tie up the thoughts between different competencies. And we found that to be extremely challenging. In fact, miscommunication or misunderstanding of how the data. So for example, I'll take one example where the data required for transition was asked from IT. which was to be leveraged, for, your FRA. Now, the data ask was very clear, and it was outlined by the actuarial and accounting team was also on the same page. But IT didn't really understand what was the end objective. And once we had actually processed the data, the entire analysis has concluded. And when we start looking at the output, that's when it got realized that the understanding or the capping at which the data point had to be limited to, that had not been taken care of. So again, it's very important to make IT as much a part of your conversations on 17. That actuarial and accounting are very used to talking different languages, and hence it's important that they attend the sort of trainings which are happening in your organization on a uniform platform. I think other challenges, data I think is clear, right? On a live front, data, not just live, non-live data availability, accuracy, granularity, I think we've all heard. Policy choices, I think some standard, we need to think about what policy choices, and probably the fact that there is so much ambiguity in some of the policy choices, we do need to recognize about keeping a level of impact assessment to assess what those policy choices are. So having a longish view on your the implication of the policy choices. So some examples, I think, for example, in life, I think treatment of participating business, so whether it's estate or even sort of the implication on how power is going to be treated. The standard, the measurement models are not really, constructed with the power business, but how do you really make that compliance, I think requires fair bit of navigation. So I think there are some standard policy choices which we have an understanding, but once you start implementing, those aspects also require fair bit of analysis. I think on the non-life side, I don't know which ones came out.
Similar ones with the
So I was
technology
surprised actually
transition.
that transition did not get as many votes on the life front. Transition for life, I think, is a significantly challenging, requirement. While the policy choice is straightforward, but I think complying to it does have significant implications. So whether it's operational implications on your opening balance, those are fairly large. Even your policy choices in transition, I feel, are quite challenging. On the non-life front, I think, again, Yogita and I work together as well. We've had several discussions that alignment of, various stakeholders is critical, again, and probably you can add on to that more passionately. But also, I think, given that non-life currently, there are certain policies where transformation is not just required in terms of 17, but also in terms of how we look at the business. Cash flow approach is a very new concept, discounting are new concepts. So those again have a fair bit of implication. This is right. I think non-life, the technical policy choices, where we see mostly challenges are, product classification, for example. That's not really a challenge in life. Life, I think there is a fair bit of alignment in the market, but in non-life, weather-based products, whether, to be treated as investment or insurance, I think it's fairly, the market is diverse on that front. Then contract boundary, whether, in terms of whether you want to look at, combination or separation of products. So motor products would come into that. So again, I think, the policy choices definitely, absolutely, again, in non-life, but very different, distinctively different between life and non-life, where we see the challenges arise.
Very rightly explained, Saigeeta, that, and I can add my bit to it, is, from the non-life perspective, I can say, from the non-life perspective, given that most of the companies right now are more of top-line driven rather than bottom-line driven. So that perspective itself has to change, because all the three pillars, finance, actuarial, IT, has to come together. And I think right now also in the current scenario when IBNR is seen as one of the biggest liability on the balance sheet, and there is always some tussle or something going on between the three pillars. But I think as actuaries we can take a lead, and or maybe we know that how crucial it is to implement it nicely, because there have been examples across geographies where you need to ensure that these three are working together. Some insurers across geographies have done a very wonderful job by having people from all three, from IT, from finance, from actual working together, so they had no choice but to align with each other and understand each other's language. So definitely these are the major ones which we need to handle and be prepared for. So moving on, Asha, given that one of the major purpose for IFRS 17 was to solve the information asymmetry for the investors, and given that there are so many policy choices, life still aligned, but non-life we can choose, as per our, type of business or the mix of business we are doing. Do you think this objective will be achieved? This will be there, that the information asymmetry will be resolved?
Thanks, Yogita. See, we have to remember that the standard has been in the making for long. A lot of thought has gone into it. And one of the main purposes of the standard was to address the information asymmetry. So as Indian insurance companies, we are still in the stage of implementing. But if I were to hazard a guess, I would say that the information asymmetry is going to be addressed. There are going to be a lot many disclosures than before, which should help investors in understanding what is the underlying drivers of the business. The policy choices themselves, even on the life side, I would think there are a lot of choices which insurance companies can take. For example, even the transition which Saigeeta talked about. So the transition itself, there's a lot of choices which companies could take, or even your asset, the way you value your asset, your runoff of the CSM, your risk adjustments, your RDR. So there are plenty of choices which are available to insurance companies. And this, yeah, if you just, on the face of it, it could mean that these choices could also complicate the results for investors to understand. But I would think the choices which insurance companies would be exercising will be based on the underlying drivers or what drives the business. So the choices themselves will be exercised in such a way that it reflects the business. For example, if we have to talk about assets, correct? Now, how do we recognize assets? Is it through fair value, through P&L, or through OCI? But I would think most insurance companies with long-term liabilities would end up choosing to value the assets on a fair value through OCI, because the underlying motive would be to reduce the volatility on the P&L. So I would think there will be a convergence of the choices which companies will be exercising. And once disclosures happen, the choices which companies exercise will be giving more information to the investors as to what drives the business. So I think the purpose of the standard of having more disclosures for investors and bringing about comparison across insurance companies will still be achieved.
Very right. So yes, like maybe not like other industries, say a paint industry, we can do a direct comparison from that point of view, but definitely much more information will be available, and the type of choice which any company is doing will also reflect the type of business or the vision they are with the vision with which they are writing that business will definitely be reflected on. So moving on, given that the onerous, non-onerous, the way this business will be dealt, that will also be changed. So what in your experience will be the most affected products or line of business, so to say, for the non-life products for the life side? So what do you think will be the most affected one, in positive way as well as the negative way, which one will that? And building on it, how do you see the business planning and strategy changing for life as well as non-life?
I'll go. See, the fundamentals of the business are not going to change, correct? For insurance companies to be successful, we have to do good underwriting, we have to choose the right risks, price them right, do good risk management, bring in expense efficiencies. So none of these fundamentals are going to change because of IFRS 17. So now on the life side, now what is onerous or what's not onerous may not also change very significantly, especially on account of expense. I'm assuming that that expense is the allocation is the one which creates this, whether something is onerous or not onerous. I think on the life side, there is a fairly good understanding of what's the expense loading which can be done for each kind of product. And the pricing is done accordingly. For example, annuities are loaded less as compared to other lines of business because there is so much of affordability which is provided by that line of business. So that understanding is good, and that's how companies have been pricing. So I don't see that IFRS 17 is going to change that in any way. But what could change is that there will be a lot more granular information which will be available at companies' disposal, correct? Now, suppose we are writing protection portfolio. Now, we see it as one portfolio, and maybe we go and write more business in a, say, slightly different geography where the experience could be different. So now, of course, this information will be available now also, but with IFRS 17 getting implemented, this is information which will be available much more readily, and therefore managements can choose to act on it. Do we have different products for, say, tier 1 cities as compared to tier 2 cities, or do we still manage them holistically? So these are some of the aspects which people will be thinking about. So because of IFRS 17, I do not see that anything much is going to change by the way of, by way of pricing, but they could choose to reflect some of these things. What could change, like you also said, what could change in terms of business strategy also is the way they manage different channels because of the availability of information. Now, maybe there are certain distributors who are doing very well in terms of persistency or in terms of, the kind of risk they bring in or in terms of complaints. So this information is now available to management, and therefore they could set KPIs which could help them drive this better. Or, for example, you may even choose to price differently also. Like I said, because you have more information, you may choose to price differently also. So these are conscious calls which will be taken on account of availability of information and therefore in an attempt to drive better profitability. What could also change is how we express our KPIs. Right now, we are used to expressing KPIs in a certain way. We say our VNB margin should be this, our EV should be this, our stat profit, our solvency. So some of these things now, of course, it's IFRS 17, therefore the language is going to change. So we need to understand what it means in terms of new terminology that we'll be using. So once this understanding develops, the way we articulate our strategy is also going to change. So these are some changes which we can expect because of IFRS 17 coming in.
No, and very true, because I think there was a sort of analysis done on the half-year results, which were produced primarily for European market. And I think the key finding was that there is absolutely no shift on the strategy, which companies are, going to be getting in just because of compliance to IFRS 17 on the life side. Now, on the non-life side, I think there are some aspects to consider. The first one, discounting itself. That's going to be new. So the implication, especially for long-tail business, your motor TP business, will be positive. So even though you have risk adjustment, which shaves off some impact of discounting, but the discounting has a much larger implication. So that's definitely a positive. The second one I would believe is your DACing of expenses. Again, that's going to be fairly the impact will be large for some long duration products again. So again, probably motor OD as well, where these implications you can rightly see. The second, I think, where I would see a negative impact is probably shorter duration, high loss ratios. The fact that you need to recognize losses immediately may mean that, because there is current, like Yogita also mentioned, that some of the business planning is focused on top line, especially in non-life, focused on top line. But now with the cash flow approach, recognition of onerous contracts immediately, there is going to be a need for looking at underwriting experience and building that into your business plan. That's going to be a natural progression which will have a significant impact. In fact, I think again, I think even on pricing, we would expect better efficiency. Also, if there are assumptions, there's always this question that you can still take assumptions which could make your picture look healthy as at initiation. But if that deviation sort of consistently is wide, then your auditors are going to come back and ask you that to explain those deviations. So it's not always that you may say because your assumptions at initiation looked all healthy and but the experience down the line made it onerous, and hence you did not call it out as onerous. But that story only stacks up for a short duration.
Very true. Given that we have already got that we are running out of time, I'll quickly ask I had more questions, but I'll ask one of my last questions. Given that other geographies have already implemented, and there have been some learnings from those markets, right? There were challenges they faced, and then they did some learning. So what are those learnings from the other geographies which we can adapt to our market and can handle our challenges efficiently? We can have those learnings. So maybe some top 3 learnings you can share with us.
Sure. Maybe I can
So I'll just take only 2 minutes. I'll just sum it up in 1 or 2 sentences. See, I think we should not see the implementation as the end of the journey, correct? After we implement, we'll get used to IFRS 17 results, and a business is going to be run based on this IFRS 17 results. So what we need to keep in mind is that we need to be able to reach the IFRS 17 implementation, but also make sure that whatever we do in future is catered to in our implementation process itself, so that we do not go and revisit any of the metrics, because it's a very expensive affair. We would have invested a lot. To go and redo things may be difficult. So it's something which we need to keep in mind when we are going ahead with the implementation.
Right. No, absolutely, Asha. I would say that, both implementation and post-implementation don't overcomplicate the process. So a couple of large failures which have happened is when it's become a transformation. You should look at it as a transformation, but maybe transformation, rightly chosen for getting you to the compliance. So, automation of data, etc. are important, but maybe treasury transformation, would you want to take it up in your IFRS 17 journey? Again, something to think about. It's very important to toe the line between tactical versus transformation to ensure that the iterations at the end of the journey are limited. That's again a significant learning, that when the process becomes complicated, the transformation becomes larger, or there are too many tactical considerations like manual adjustments, then your end product becomes something which is with lower governance kind of a process. So that's something which needs to be looked at. I think as actuaries, sometimes we get very swayed away with the wanting to get everything accurate to the T, but ensuring that we understand this is an accounting standard. So there is some level of judgment that needs to be applied and bring into the system. So I think that's a conversation where I see actively with my clients also, where when we are sort of understanding of what policy choices to take, that while of course we want to take a policy choice which represents the business correctly, but it's important to understand the implication of the choices. So again, judgment plays a key role here.
Very rightly said, Saigeeta, that yes, we need to have a balance between the practicability and the complexity of how, because ultimately it's an accounting standard, and then Many companies also across geographies tried to patch in their other fixes, as you said that some IT fixes or data fixes while during implementation of IFRS 17, and that led to much more money spent on the IFRS 17 implementation. So that also one needs to really see that is it an opportunity, how much you want to spend, long term, practicability, all those things have to be kept in mind. Can we have 5 minutes for the audience questions? I would like to open the stage for the audience questions now. Any questions, please? Anything we would like to ask on any challenge, anything you're facing? We are good? Okay. Okay, thank you. I think, so then I'll just summarize it up. So as we discussed, that alignment of all the three pillars, actuarial, finance and IT, and timely planning and long-term view, and having a balance between practicability and complexity will be the key ingredients to make this IFRS 17 successful. We do have one question at there. Can we please have the mic? Okay, so the question is, the standards are open-ended on whether crop and whether insurance should be included in Ind AS 117. Could you kindly share your view on the same? Saigeeta?
I think, again, it's open for interpretation. I will not say it's insurance or investment because, as I said, that we have a lot of differentiated view. There is definitely the way the policy of the product is structured, alignment with insurance, but I think there is also the fact how the payout is happening and how the incidence of insurance is happening is more aligned with the IFRS 9. So without sort of saying whether it's 17 or 9, I think there is an argument for both to be made here. The experience in the market is that most, it's fairly divided right now. I don't think there is a clear cutly, whether it's going towards 17 or 9.
Yes, it's a very divided view. I can add from the non-life perspective that, but I think alignment on this will become crucial because usually crop business is a multi-crore business, so definitely an alignment on this will be required. But right now it's a very divided view.
Maybe the regulator will come up with some, so there'll be some,
Yes.
maybe it's still a policy of choices, but still maybe there'll be some overrides which the regulator will come up with. And this could be one of them. In order
So we have got another question. What is ALM implication due to IFRS 17 implementation?
Like I said, the fundamentals of the business are not going to change because of IFRS 17 implementation. It's just the way the results are going to be looked at is going to be slightly different. So IFRS 17 itself may not bring about any changes of ALM. If you are currently want to be matched on the duration side, you will continue to do that. So maybe you will, currently you may be targeting to manage your solvency balance sheet, or you could be managing your EV balance sheet. So tomorrow you may target to manage your IFRS 17 balance sheet. But it depends on what is the most important thing for the company at that time, whether it's solvency or the IFRS balance sheet. So this play is going to be there always.
So another question we have is, what is the most significant challenge you faced in the multiple implementations you are part of? Saigeeta, would you take that?
I don't know if I can. I think data probably, because IFRS 17 is such a data heavy. While when we talk to the clients at the start, there's a lot of confidence in the quality of data which is owned, but just the sheer amount, the granularity at which data is required, and once we start performing reconciliations at those levels, those have a lot of challenges. And then second is transition, again data, if you go back and you need to recreate some of the data items, again there is a fair bit of challenge in getting, there are data issues year on year, and that's fact of data, right? Because if you're not managing data at that level of granularity, there are checks and balances that are not built at that level of granularity. And hence, when you extract that data at that level of granularity, we always find challenges. But it's not just the unavailability, but it's also the accuracy which inherent in the data that becomes an issue. Also, I would say that some of the policy choices have been tricky. Both on life and non-life. I think we spoke about the non-life just like crop, for example. I think the market is fairly divided. Life, I think participating business, there are multiple views on that. So.
Okay. So one last question was there, which we can take quickly, is if there is any, error or challenge faced post-implementation, how much back a company can go and correct it?
See, I think we do have, a year to go back, rectify. Always, like any accounting transition, you can sort of make corrections, etc. In any year you plan to make. So I don't think that's a challenge. But globally also we are seeing that there's a lot of remediation activities which are happening. I don't think,
Yes.
that's something which is a part of any new transition to an accounting standard. There are once you transition, there may be implications on certain nuances that you've not considered. We were talking about conformity. I think one interesting sort of survey result was that most companies, for example, even with a lot of creativity in coverage units we've seen, even then for life business, we saw that it was basically falling, the speed at which, you were recognizing CSM was falling in a fairly standard bucket of 5 to 7%. So even though there are convergences, there are divergences, that convergence just logically on basis of the business are happening. So.
I think with this, we need to wrap up. We have already ran out of the time. So thank you, Saigeeta. Thank you, Asha, for a very nice conversation. Thanks a lot. Thank you for the audience for being such a nice audience. Thank you.
Thank you all. Thank you all. And it was a lovely discussion and something for us to ponder upon. I would now like to invite Ms. Suricha Bhargava to give mementos to chair and the speakers. Ms. Suruchi Bhargava, and yeah.